Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategy we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our forex technical analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and inside bar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. As we begin to look at this week in Forex, we can first look about the reduced likelihood of QE3 here in the States. We had an upward revision here in the fourth quarter GDP. We have 4-year lows on the jobless claims. Yes, I know some people are no longer looking. And our February PMI of 51 shows expansions. And Bernanke, Bernanke during his testimony in front of Congress still shows some caution with the true strength of the economy, but the likelihood of a QE3 has reduced. In reality, the likelihood of QE3 across the board, minus Japan, looks like it's going to be small. So as most central banks are getting ready to report this week, Australia, New Zealand, Canada, England, and the European Central Bank, they're going to wait and see, and it's not likely that you're going to see expansion of their portfolios. The yen continues to be weak, and this is why you're seeing some of the other central banks waiting and seeing, because look what the Bank of Japan has done. They've implemented a 1% inflation target. They expanded their purchase program, and they've expressed aggressive verbal intervention. And the yen, again, how low can it go? What we're going to watch for this week is we have several employment situations that we're going to be watching, and there are going to be additional GDP numbers that are going to be coming out that could definitely affect the market. So let's start off by looking at the dollar. We talked about the 3-month low here this week, but you can see that really matched up with some of the wicks here from December, even going back to September. So the buyers found value right here at 78 and really were able to push it in and bring it back up into this 79, 80 range. Notice though, of course, we are making lower highs, so we really need to get above 80 to break this downtrend that the dollar has been in. But certainly sideways to down for the dollar. Now we had a strong end of the week for the dollar, and what does that mean for gold? Well, gold had a very weak end of the week, almost a falling 3 pattern. And what's interesting about this big candle is that we found support here around the 1725 price level, and we broke right through it. And as we came back up to test it, we found weakness. So sellers may be finding value at the 1725, trying to push it back down to the 200 moving average. Finally, what's really affecting us all, crude oil. There it is at the swing high of 110. We are watching the 114 price level. That's what we were watching. So it's going to be interesting to see if this 110 holds up. Little sideways price action. If the dollar strengthens, we may see some weakness here in crude oil. Here we are looking at the euro dollar on the daily chart, and one thing to look at is if you go back here to September, you can see this is where the swing low was, and we bounced. Come in here into November, there was a swing low here, and we bounced. Now we did break it here and come all the way down to the January lows, but as we have recently entered an uptrend, and you can see we're defending the 50 moving average here and the 1.3008 price level, and we've come back up to this resistance. We've come right back down, and we've tested this support. November, September. So here we are once again. Now the key thing here is you have to look at the long-term picture. You can see that we're in a downtrend on the longer time frame. Even though here in 2012 we're in an uptrend, the longer term downtrend still there. We still have the 200 moving average as resistance. Notice it acts as resistance right here. And we still have our downtrend line to contend with as resistance. So don't get too bullish right now. You have to be aware of what's going on. So let's see what happens here as we try to defend this 1.318 price level. If we can bounce here, that'd be great. It would reaffirm that support price level, and we might see some sideways price action. And again, with all of the Bank of England reporting this week, the European Central Bank reporting this week, and the dollar, the employment situation dollar, we definitely should see some action in this pair. Switching over to the pound dollar, we can see we had a much more aggressive move up here and then a sideways price action. However, oops, zoom back over here. We did get a breakout above the 200 moving average. We did get a breakout into this new channel here. You can see this channel was where we were back in October of 2011. So what's good is we're pausing here above the 200 moving average. If we can stay above the 200 moving average, then this will certainly remain bullish. Now notice on the euro dollar, we were below this 200 moving average, and we are below this long-term downtrend line. Here with the pound dollar, because of this big move up, we're above the 200 moving average, and we're above this downtrend line. So there is some reason to be a little bit more bullish on this pair. But again, we have been channeling, and we need to see this stay above the 200 moving average to keep that attitude. Finally, with the dollar franc, with the dollar, as we talked about earlier, strengthening towards the end of the week, we see that this pair bounced that support price level and also bounced up and forming a little resistance here. We'll see if 0.91191 will act as resistance, or will we make it all the way up here to the 50 moving average. As we come to the watch list, first we have our low volatility watch list, which is our 1 hour time frame using Bollinger Bands, looking for consolidation, looking for some channeling, and finding a breakout in the direction of the trend. However, right now we don't have any candidates. There are a couple that may be setting up, but for right now we don't have any that meet the textbook definition of a Bollinger Band squeeze. Our inside bar watch list is where we watch the range of the day, high and low, and compare it to the previous day. In this case, we're looking at Friday, compare it to Thursday. And we do have one candidate, and that is the dollar Canadian. There were several inside bars on Thursday, but Friday we just have the one, the dollar Canadian. Moving on to our education spotlight, we've been focusing in the different areas that each trader has to address in order to be successful. We started off by talking about defining who you are as a trader. Last week we talked about defining your rules, and this week we're talking about monitoring. Again, first and foremost, we want to make sure that we're looking at high probability trading setups. We want to make sure that the trend is our friend. We want to make sure that we're leveling the playing field and we're trading with the pros and not against the pros. Then we want to track our trades. That's real important to track your trades for two reasons. First and foremost, you have to learn from your mistakes. Don't keep paying for the same mistake. Make the mistake. And mistake is a bad word because sometimes the market changes and that strategy that you're using is no longer working. So it's not a mistake as much as the cost of doing business. So you need to learn from that and make sure that you can continue to make those adjustments as the market warrants. And finally, you have to manage the money. And this is where one of the most overlooked aspects. I know we talked about psychology, very much overlooked, and actually looking at the money is also overlooked. Sometimes you'll have traders have a winner and a winner and a winner, and then one loss blows out all those winnings. So you have to manage the money to make sure that your drawdowns don't wipe out your profits. You can have positive expectancy that you can have more winning trades and losing trades, but you can have a negative expectancy if those losing trades, if you have too big of a stop or too big of a drawdown and they wipe out all your profits. Please continue to comment and subscribe to our channel so that we can continue to give you good value here in 2012. You know about most of our resources, and of course we want to put a spotlight there on our managed forex accounts, leading brokers, full transparency, fully regulated, your accounts giving us limited authority to trade for you. We'll create an individualized trading plan for you so that you can make informed decisions about your financial future. In the end, it doesn't make a difference about your rules, your indicators, your systems, your trading room if you can't pull the trigger. And that's what we do through our coaching. We help you build that psychological capital that you can pull the trigger on each trade and you can make educated decisions about each and every trade. Thanks, guys, and I'll see you next time.